Hello everyone, Joshua Hayes at BigWaveTrading.com. If it sounds like I just did an 8-ball of cocaine during this video lesson, it's because I respect your time too much to make a 30, 40-minute video, 1-hour video, and I have an hour of content to go over, but we're going to try to shorten it up. Basically, what I want to talk about is that there was a warning that this sell-off in the market on Friday, which kind of had a little bit of a follow-through-ish kind of moment yesterday, but we're still stuck in a range. It's a mini flag. It's a bear flag. There's distribution in the flag and there's ugly reversal bars, but the VIX was hinting that this was to come. I told everybody about the 9 EMA being above the 21 EMA being above the 50 SMA back here for the first time since in February. And of course, it led to that sell-off. There was a bit of it seemed like, oh, we won't collapse, and then we collapse. Nothing says that's going to happen this time, but the VIX 9 over the 20 over the 50 SMA hinted that this was to come. VIX is now above 20. It shoved above 25, even being more risk off for me yesterday. But nice reversal today. Kind of hoping maybe that was it and that the sell-off is over. But I won't know for a fact until we kind of get through this bear seasonality and earnings season. But I'm hoping that maybe we've already seen the worst. If not, the VIX warned us and the J&K warned us. And in last Friday's video lesson, I told you it was a red flag market going off margin. It is still a red flag market. I'm still off margin, but guys, I'm still taking long signals if I get them. And this evening, I have 2 grade B long signals. They are not grade A, and we'll discuss why they're not. But I want to show you some trades that happened this week for me. So SMR on 1014, I had SMR as a long signal above 47.42. I gave myself only a 1% limit offset. Now, normally I would trade SMU, and of course it's not on the antiquated telechart, but normally when we're in a risk-on environment, I'm in a green flag market, I'm all in on every trade, full margin, full buying power. But because SMR is signal, this is not a great base, it's kind of choppy, because it's not a perfect setup and because of the conditions in the market. And remember, conditions basically are going to always be more important than chart pattern setups. You want conditions to be perfect, which we're not currently in, and then you have your chart setups. If you take chart setups in non-perfect condition environments, bad things might happen. So first off, the first bad thing that happened is on this day, it's up 16% one day. SMU's up 32%. Not only did I not use margin, but guess what? I didn't even get filled on SMR. I missed SMR by 2 cents. It missed my limit offset by 2 cents. My limit offset of only 1% is way too low for a stock like this. So I paid the price. Would have sold 20% the next day at the market, at the open, and then had trimming and trailing stops on the position on the way down here, final stop here. But look at that reversal yesterday and look at that follow through today. That's not how breakouts should be acting. And then recently, I told everybody I'm into this HIMS setup. And after this day, I now tell everybody, unfortunately, I know a lot of people that were getting long this stock after this signal here, but guys, the 50 SMA is trending down, and the 9 EMA, not shown on this chart, even though it's on this tab, is crisscrossing through the 21 EMA, which happens to be crisscrossing through a downtrending now 50 SMA. So I said I needed a handle to form. Day 1 is good. Day 2, now no good. The pattern has failed. So another breakout, fake out. And guys, buying breakouts early on after a follow through day in the market, like in April, after we got the follow through day in stocks like Hood, in stocks like Roblox, that's one thing. But buying breakouts now after you've been in a basically nonstop uptrend off those April lows, bad things are going to happen. So HIMS is no shock. SMR is no shock. But I also tried ACHR, and of course it was early. I like it to be off the 21 EMA. However, in this tape, 9 EMA seems to be all I'm getting. So I tried it off 9 EMA. It triggered and filled the next day, but look at the candle. First, it opened way down here, traded all the way down to here, then came up and through my signal. I didn't like that, so immediately out half. We got that then a gravestone doji candle the next day. Half of my stops now go below this low a day, and now ACHR has basically failed. So ACHR is another breakout in I would consider a leading stock, a thematic stock that failed. So ACHR, SMR, and HIMS. Then today we have gold after the parabolic run. My five-figure physical purchase in gold back in 2003 and 2009 is well into the six figures. And I actually was making mention yesterday in my chat room, maybe I should go try to sell some of my gold at the pawn shop. Knowing that I can't get spot, I would never do that. But today we get the reversal. Look at the volume bar with the red bop. So the volume bar with the red bop, I'm bringing this up because I want you guys to look at SPY. When we get after an uptrend when we get red bop, this is a tertiary indicator and I really don't care about it too much, but when you get red bop after a long downtrend in the indices, you normally see a low. Red bop after a long uptrend, you're normally near or at the highs. So we roll over here, we get red bop at the bottom, we lose that red bop, smooth sailing. But now we have red bop showing up in the SPY. We have red bop showing up in the, not QQQ, the IWM and the DIA. So we've got indications out there that this market is tired short term. So breakouts definitely are not of interest. But I want to make it clear, there's good looking stocks out there. Core weaves off the 21 EMA. This is normally actionable for me. It just isn't in this tape. Unless core weave was already rallying huge, pulling back on low volume. But here's what I see. Wick, heavy volume. Wick, slightly heavier volume the day before. Wick, above average, heavier volume. Wick, above average, heavier volume. So it's just not a nice, calm, steady, orderly pullback to the 21 EMA. So I'm going to pass on core weave. But, like I said, still looks good. So top watch of mine. You got AXP breaking out. You have ESE trying to break out. So, and TPC, which is actually currently in a portfolio, and this is looking good. Actually, I'm confusing TPC with TPR because I'm an idiot. But anyway, there are some good looking stock charts out there. AVTX, there just isn't a whole lot. And there's still, this is a risk off environment. I'm hoping, like I said, what did we get from this to this? We got a 3% move. If we go down 10% in the market, I'll be all in again in my long-term portfolios. And I gave a list of those ETFs in the last video lesson. I'm not looking for much, but at the same token, I'm not looking to get heavily long, go back on margin, being all in after such a long uptrend and with us now starting to be volatile and rocky. I asked myself, is the VIX below 20? Well, not yet. Almost again. Is the J&K and HYG completely back above the short-term moving averages and trending higher? No, not yet. Are we under an accumulation phase in the indices? Not yet. I mean, let's see where we're at. If we reset, this is an up day. We don't violate the lows. So we're still technically now looking for a follow-through day on heavier volume, I guess you could say. And if that happens, maybe I go back on margin. But I really like my 21 EMA bounce buys or my great setups, and I'm not just getting them quite yet. So it's still a risk-off environment. It's still a red flag market. I still want to get long signals, but make no mistake about it. Getting long a signal when conditions are perfectly aligned is one thing. Getting long signals when things aren't perfectly aligned conditionally in the market is another thing. And right now, I would say that we're not there. So unless it's grade A, I'm not going to have any confidence or conviction behind anything I want to trade. So with that being said, let's get to the two new long signals I am actually going to take. The first one is Google. Now Google, this is a very strong chart. Look at the relative strength at the bottom of the screen, the white line, how it's above the 21 EMA. Quiet volume in this consolidation, but make no mistake about it, this is a chase buy. The 9 EMA is not shown here, but it's hammer candling off the 9 EMA, but it's not doing it after a strong, powerful move. Nice slow decline. See this hammer here, how it doesn't happen right off the 21? It has a pseudo hammer, but market conditions weaken, fails, Now we kind of have a reversal from yesterday's intraday highs right off the 9 EMA. Is it off the 21 EMA? No. So it's not a grade A setup, but Google is very strong in this tape. But once again, under the right conditions, if this happens off the 21 EMA, I don't just get long Google, I get long GGLL off the 21 EMA using a leverage ETF with all of my available buying power. And if I have two long signals in a really hot market where everything's lined up, it gets all of my buying power divided between the two signals. Half goes into one, half goes into the other. So this evening, Google is one of the longs, and as we'll look at it, it's Telechart version 25 also. So what I'm going to do is I'm going to get long above the high of the day. I'll have a 2% limit offset. So 254.23 will be my buy stop. 2% limit offset, and I'm risking initially down to here. But if it triggers fills and doesn't immediately go higher, what do you think I'm doing in this market environment? I'm immediately starting to get out of some, and I'm trimming and trailing stops on the way up. So while the initial stop might be here, if it shows any signs of putting in a candle like this, let's say this day is here, and this happens on this day. On this reversal here, a stop here, a stop here, a stop here, and a final stop here. That ensures that I don't lose all of the account capital put into this trade to this loss. And normally it's like 1R is what I try to risk per trade whenever I don't have everything lined up. So on this trade, I'll risk 1R of my total account capital from this entry to this low. And then if it fills and doesn't do anything, I'll have staggered stops along the way down, which will probably prevent an even 0.5 R loss with the way that I trail stops. Now, that's the first long, and we'll look at Telechart version 5. Here's the second long, IFS. Now, IFS, with Google, it has an 86 group relative strength. Awesome. Has a 98 composite rating. Amazing. IFS has a 90 composite rating. Awesome. What's its group relative strength? 55. So what are the odds that this is going to super succeed or succeed easily and cleanly without the group participating or only being like about mid-range at 55? That's not even a passing grade in high school. So what is it? A 60 is a D minus. So 55 is an F. But here's what I have with this one. Right off the 50, right back through the 21, and the 5 is on top of the 9, is on top of the 21, is on top of the 50. I also have a volume surge. I also have a BOP surge. Now, is BOP surging to max green? No. Is volume truncating this chart? No. So, once again, grade B, not grade A, not an extremely bullish market where everything is aligned. So what I'm going to do is get long this grade B setup above this high of the day with a 2% limit offset, 40.95, 2% limit offset, and I'll initially risk to this low, and I'll trim and trail stops if it triggers and fills and doesn't just explode higher immediately to make sure that I don't lose the full 1R on this trade. Now, what would make this a grade A setup on this chart? Well, if I got this hammer candle on this session right here today, right off the 50, if volume would have truncated, and if this BOP bar would have gone max green, now you got a grade A signal. But we don't have that. And kind of in that, spirit, EME was a grade A canceling signal here. Notice how it's worked even after a shakeout buyback session, while GVA's grade A signal here did not work, and after giving a buyback has failed the buyback signal. I'll show you where the little granular intricacies come into play. So with Google, once again, we're off the 9. We're in a daily squeeze. Weekly, we got triple green. So this is all the reasons why I'm taking this one, even though it's extended. So this is Google. Just wanted to show you how it's in a squeeze, even though it's not perfect, why I'm taking it. Now, if we go back to EME, on the day that it was a grade A signal, let's go ahead and let's make this visible. Okay, so make this visible. On the grade A signal date right here, you have let's actually get it right to, can we get it right to that day? Why can't I get it to that day? All right, let's do this right here. So on this grade A signal, you have the 5 above the 9 above the 21 above the 50. No surprise, it works. And when you get your buyback signal, the 5 is barely below the 9 is still above the 21, which is the most important, and it's above the 50. And we continue to move higher. Now let's go back to GVA's grade A signal on that day on Telechart version 7 and look closely. You'll see on that day, the 5 was below the 9. We have the 9 above the 21 and above the 50, but on that day particularly, the 5 wasn't above the 9. It was on EME. So now we have the cross, we get back better, we get the buyback signal. Notice the 5 is well below the 9 is below the 21 EMA. Any surprise it didn't work. So now we fast forward to IFS. IFS has everything in perfect alignment, 5, 9, 21, 50. But here's an issue, another issue. We go back to EME. When it has that grade A signal, it's in a squeeze, but it's a red dot squeeze. It actually went red dot to yellow dot, but fired back into the red dots. That's a good transition. When we go to GVA, notice on the signal date, GVA is in yellow dots. Notice on the buyback day, GVA is in yellow dots. Unless it transitions back to red and actually confirms the prior price movement before the yellow dots is normally bearish to me after a long uptrend, not bullish. So here you go red, you go yellow, now you go red again, then it's great. But until you resolve from that yellow back to red with price confirming, it hints that it could be a top. So with IFS, we transition from green to gray to red to yellow. Will we transition back to red? I don't know. But these are all the reasons why it's grade B setup. Now remember, guys, price is all that I really care about. Price is primary, volume is secondary, squeeze is tertiary. All my other indicators are quadrary. I really just need a price and volume chart. I'm just trying to stack all the odds in my favor. And right now, IFS and Google don't have everything stacked in its favor. And the overall market condition is weak short term. It's not good after the Friday session until we close above Friday's high of day, or actually probably the opening price, and then can follow through. I'm not going to be quick to come back to being on full margin, 200% all in long on every signal. Until that scenario happens on the SPY or the QQQ, grade B size for grade B signals. Nothing more, nothing less.